All right, everyone. I got Troy Cates back on the channel. Long time no see, Troy. How are you?
Good, great to see you.
So Troy is a founder, co-founder, and managing partner of NEOS. And today we're going to talk about one of their newest ETFs, income-oriented ETFs, which of course my channel specializes in. That's what we discuss here. BTCI, the NEOS, Bitcoin High Income ETF. So let's just start with why did you guys decide to launch this ETF and what does it do? Who is it for? Give me the rundown.
No, of course. When you think about NEOS, NEOS stands for Next Evolution Option Strategies. So all we're focused on is bringing out option-based products to supplement income, which you obviously focus on. So when you think about NEOS, we're really a solutions provider. So we have a number of high income equity ETFs. We have a number of fixed income and cash alternative ETFs. And we really wanted to get into the alternative space with a Bitcoin product. So we've been working on it for a while, and it took a while to get through and get approvals to actually launch. But again, we're looking at it as a solutions provider. If you want to have exposure to Bitcoin while still bringing in some income and maybe want to lower your overall volatility in that portion of your portfolio, this might be a product that you should take a look at.
Okay, perfect. So let me just share my screen. Let's check it out real quick here. BTCI, that is the stock symbol. You have an expense ratio or an MER of 98 basis points. And if you could maybe just go into the strategy. So from what I saw, looks like you guys are getting exposure to Bitcoin. First of all, how are you getting exposure to Bitcoin? Are you investing in this ETF here, HODL from Van Eck, and then
Sure.
writing options on the BITO ETF to generate those calls?
So we're doing it, yes, we're doing it in two ways. One, we're long a portion of our portfolio up to 25% in one of the Bitcoin ETPs, which you see right there, HODL. When you're buying one of these ETPs within an ETF structure, which BTCI is, you can't own more than 25% of it. It's a rule because they're 33 Act funds versus a 40 Act fund.
Okay.
And so to get that additional, call it 75% exposure, we're using BITO, we're using the option chain of BITO to get that exposure. So you could see there's a long call with an expiration out in January and a short put with the same expiration, and they both have the same strike. When we put that option strategy on, we're basically giving us exposure as if we had bought additional BITO, if we had bought the BITO ETF. So we're doing it synthetically through an option where we're buying a call and selling a put with the same expiry and the same strike. And then what we're doing on the short call side, which you can see a little further down, is when we're rolling this on a monthly basis, we're
Yeah.
selling calls out with a little bit longer of a duration. So the duration is about 7 weeks or so from where we roll it at the end of the month. And we're selling these calls out of the money from when we roll them. Um, and the nice part about our rules-based strategy, very similar to some of the stuff we've walked through with the equity products, SPY-I, QQQI, and so forth, we don't need to write on 100% of the notional because of how our strategy works. So when we're rolling, it's looking at Bitcoin volatility, the rate of change of volatility, and those factors drive not only how far out of the money we're selling these calls, but also what notional we're covering. So, for example, right now we're just about 50% covered on the entire notional of the portfolio. So that leaves a good portion of the portfolio that's free to move higher
Yeah.
and not capped out by those short calls. So we really wanted to make sure as we brought out a Bitcoin high income ETF that we were bringing in income. And the goal for this product is to bring in enough income to distribute anywhere from 25 to 30% annually, bring in enough income to do that, but leave the portfolio uncapped so it can move higher with Bitcoin. And as you've seen since the election in early November, we've had this big rally in Bitcoin. We've been able to, capture a lot of that upside while still bringing in that income for the distributions.
Okay, so a lot to unpack there. Let me just try to summarize for myself to see if I understand it. So you're owning or you're getting exposure to Bitcoin in two ways with this ETF here, which seems like you're not writing calls on. So that's just participating in what Bitcoin does. because you can only get 25, you can only put 25% of it in something like that. But to get exposure for the rest, you're doing it synthetically. This is, pretty common. That's what Yield Max does, is synthetic exposure. You're getting exposure not necessarily to BITO, but to the price movement of BITO. That would be the call and the put at the same strike price. I just have a quick question on that because it seems to be coming back over and over to me anyway. What's the risk level of doing it synthetically versus just outright owning BITO? With the risk level, I've spoken to other fund managers who say the beta is the same. It's the same thing. The risk level is the same. What would you say about that? Is there a higher risk, lower risk doing it synthetically?
I'd say the risk level is the same. I have to agree with what you just said. And when you're thinking
Okay.
about it, you're selling this put, you're buying the call. You're basically trying to create a position that moves as the underlying BITO moves. So you're really trying to create a one delta position that moves up and down as BITO moves up and down. And that's where you're building this synthetic portfolio to get that exposure.
Okay, fair enough. Thank you for confirming. I see a few comments sometimes saying that, doing it synthetically poses more risk. I always thought it was nonsense, but anyway, at least you confirmed it. So, okay. So that is what the ETF actually holds. You see the call options here. Now moving on to the covered call strategy, which of course we need to understand fully. So I heard that, just like SPY and QQQI, you're looking max about 75% coverage. Doesn't mean it's 75%. Like you just said, right now it's 50%. So the coverage ratio, correct me if I'm wrong, right now it's at 50. It could be max 75, but it is actively managed and decided by you guys on a month-to-month basis.
It's actively managed, and it really goes through our rules-based systematic process to figure out what kind of income it's bringing in, how far out of the money those calls are being written. But yes, it can be anywhere from 50 to 75% range. Right now, like you said, we're just about 50% covered, which is appropriate for where volatility is, what kind of income we brought in, and how the product is performing.
Fair enough. And then to generate those calls, you're writing them on BITO. This is the ProShares Bitcoin ETF, which is basically access to Bitcoin, but not physically using Bitcoin futures. And a lot of other providers, including what I would say is your main competitor, YBTC, from Roundhill, they're writing also covered calls on BITO. So my question to you is, now that options are available for IBIT, the BlackRock IBIT ETF, which has like 47 billion AUM, BITO has a couple of billion. Are you guys going to continue writing calls on BITO? Do you have the ability to diversify and write calls on IBIT? What's your thoughts on that?
So it's something we're definitely looking into because obviously, as you mentioned, the IBIT options just started trading recently, and they've obviously garnered a lot of attention. So it's something we're looking into, but it does require us to get, some additional regulatory approvals and make sure that, the prospectus reads correctly. Right now, we're only trading those BITO options to get that exposure.
Yeah, I understand it could take a while to change, get the approvals and stuff like that. Okay, perfect. Quickly about distributions. So this is a relatively new fund, but you did declare two distributions here, $1.12, $1.40. So of course they're going to vary on a month-to-month basis. I know that NEOS is very known for, if we look at your other funds, for pretty consistent distribution. So the approximate yield is about 25% yield right now. What can you say to the audience about what you expect the yield to be, the distributions to be? Maybe dig deep into the distribution policy.
Sure. So the goal for this product is kind of in that 25 to 30% annualized distribution rate. So that's kind of where we saw that this product could fit. And yes, it can change a little higher or a little lower depending on where volatility is and how much of the portfolio is written on. But that's kind of the general area that we're looking to aim for BTCI.
Pretty high yield, pretty high yield. I mean, with Bitcoin's volatility, but I also like the fact that it has high yield, but you're capturing a lot of upside as well because you're only max 75, 50 to 75. Plus, correct me if I'm wrong. The BITO calls you're writing always going to be out of the money, or you do have the discretion, for example, to do at the money calls as well?
So we do have the discretion to do it anywhere from at the money to out of the money,
Okay.
but given the level of volatility that is in Bitcoin, we would be writing, for the most part, out of the money, deep out of the money in some instances, because volatility is so high, you could bring in a lot of premium from writing those short calls.
Okay, and same thing about, I'm assuming the duration of the calls, are you doing weekly calls, monthly calls? You mentioned 7 weeks. That's a little bit more than monthly. What's your strategy or the decision-making process to say, well, let's write a weekly, let's do a monthly. How do you guys decide that? I know I'm asking a lot of questions about it, but
No, it's
I'm just
good. They're
very
great
curious.
questions. For us, the synthetic part of the portfolio, so the long call and short put, is rolled on a quarterly basis,
Okay.
with duration a little longer than a quarter. So just looking at the positions right there with expiry of January 17th,
Yeah.
25, we'll be rolling those at the end of December. And for the short calls, we roll those on a monthly basis. So at the end of the month, we're rolling out just about, call it 7 weeks, but when we're closing those, there's still a couple of weeks till they would have expired.
Okay.
So very similar in a sense to what our equity high income products do on a monthly roll, just a little different with obviously the underlying and also adding in the synthetic long portion of the portfolio.
Awesome. And last question about distribution taxes. Everyone's interested in this, of course. What can you say about how these will be taxed? We discussed on a previous video about SPY-I, QQQI, and there's a lot of ROC in there, not because it's a return of your own capital per se. That's the technical definition, but it's just because of the synthetics and the covered calls, and you guys could turn it into ROC. Would it be the same thing here?
Yeah, so wherever we can, we look to harvest some of those potential losses within the option portfolio as we have distributions going out. So yes, a portion of it could be considered return of capital. Now, there's no index options in this portfolio right now, and we've all heard that Bitcoin index options might be coming out down the road. So we'll have to explore those when they do and see what makes sense. But right now, so there's no as I said, index options. But for right now, I think looking at how we could harvest losses within the portfolio and potentially part of it is considered return to capital, could potentially be there.
Okay. And again, investors could go on your website to see the distribution
Of
breakdown
course.
every month as they come available to see, I believe it's an estimate of what could be ROC and whatever, but then you
Yes.
would actually get the finalized version at the end of the tax year, I believe, right?
Yes, that's correct. At the end of the year, the main number, clients get in their 1099, and that's where the important one is that actually breaks down your potential return of capital, long term, short term, or any other breakdown that they have in there. That's what you send to your accountant to hopefully do your taxes and have hopefully a high net after tax distribution compared to the gross distribution going out.
Okay, perfect. And my final question would be, there's also strategies out there that are writing covered calls on MicroStrategy stock, which Michael Saylor claims to be like an enhanced version of Bitcoin or trying to, beat the performance of Bitcoin. Obviously, you're not doing it now with this fund, but are you thinking, or is it even possible maybe to uh, write call options on MicroStrategy instead of BITO or maybe IBIT? Is that something that's possible that you guys are thinking about, or no, we're just sticking with Bitcoin itself, not MicroStrategy?
For this product, we're sticking with Bitcoin. We want it to be a pure Bitcoin covered call strategy, where an investor could look at it, understand that there's a portion that's long exposure to Bitcoin, and understand that we're bringing in income by using either Bitcoin futures or other ETFs, possibly down the road to bring in that income and see if they could potentially bring in income, participate with the upside, maybe have a smoother return profile if there is a down move because they brought in that income. So for us in this strategy, it's really to focus on Bitcoin.
Okay, sounds good. I think you answered everything. It looks like we covered everything about this new ETF. So once again, Troy, I'd like to thank you so much for your time, and we'll definitely keep on tracking NEOS products. And I encourage you guys, talking to my audience here, go on the website, check out the website, check out what this ETF is all about, BTCI, and of course, don't forget to check out their S&P and Nasdaq, Russell 2000. They got a bunch of other really high yield index products as well, index ETFs. designed for income investors. So hope to talk to you again, Troy. Take care.
Thank you.